SMT is a very powerful confluence to use in your trades, but there are still a lot of levels of SMT that fail even when you have the proper bias in place. So today I'm going to be showing you how to increase the probability of your SMT levels holding using daily cycles. Now let's get right into it. Now the first thing I want you to understand is that price is going to run to your target when it is ready to. Just because there's a level of SMT doesn't mean that price is now automatically going to go to your target. So let's have a little look at a situation maybe you get caught up in. Maybe this resonates with you a little bit. So we have equal highs up here, okay? And we also have a buy program, right? Price is respecting bullish arrays like this FVG. So we're bullish, right? We're bullish. We have bullish targets and price retraced back down into this bullish order block, okay? So we have a buy zone. We have a bullish bias. It's very nice. And then if we go on to the 15-minute, you'll see that we actually have a level of SMT. This low down here is 5:15 in the morning and price failed to get beneath it. And then if we go to Euro USD, that very same high, right, 5:15 in the morning, price was able to take that out. So we have a level of SMT. However, if I was to go ahead and actually play this out a few hours, you'll see that that level fails to hold. So these are the types of situations that we don't want to get caught up in, okay? And that's exactly what I'm going to be showing you how to do today. And the way that we're going to be doing it is by making sure that when we're playing these levels of SMT, that we make sure that this low down here is a high probability low or a significant low. And the way that we're going to do that is by using daily cycles. And the way that daily cycles works, or the reason that daily cycles work so well for this, is because identifying a high probability low is essentially one of the main purposes of daily cycles. So it's very, very nice. Now, this first example we're going to talk about is going to be London protraction. So remember, we have Asia. If you know London protraction, you know. For those that don't, Asia should consolidate, and then London kill zone should take out that Asia's low before moving higher, right? So it should look something like this. Asia consolidates, London takes out the low, and then from there, we anticipate a run to the upside. Now, a very, very key part of these daily cycles is the timing of the session low. Obviously, this is bullish. If you're bearish, it's going to be the timing of the session high. Maybe you have seen the daily cycles flowchart I actually put out, which contains a key window within these kill zones, where if price forms the low within that timing, it has a very high probability of holding for the rest of the session and price moving away from that level. So just by nature, just by identifying the daily cycles, you're going to be able to identify significant high probability lows in the markets, because once we get this low could hold for the whole day and the whole session. So it's got a very high probability of holding. So when it comes to playing these levels, right, and wanting to find a level of SMT where the low has a high probability of holding, all you have to do is make sure that it aligns with a daily cycle, okay? Now, this was a London protraction explanation, but it works for all of the daily cycles, right? So let's say instead we were looking at a London protraction, a New York continuation cycle. So London pushes to the upside, and maybe we expect New York session to continue that move, right? And you get a push in London, a retracement before New York, and then price forms the low within, again, that key time window within the flowchart I'm going to give to you later. Then you know that this low has a high probability of holding and a high probability that price is going to run to the target. So again, if you're looking for a level of SMT and you want that level of SMT to have a high probability of holding, then if you make sure that it aligns with one of these daily cycles, you're going to have that high probability on your side. So let's have a look at a couple of examples of what this actually looks like, because it's all well and good me telling you this stuff, but you know, if you don't have proof, if you don't have examples that you yourself can go and backtest, then it's not going to be much help. Okay, so let's have a look at this example down here. First, we'll talk about the daily bias. So essentially, price had taken out this external range liquidity, right, that old low, and we had this level of internal range liquidity, this daily FVG, to go and target, right? You can see that target was hit, and the confirmation for the run towards that target was the fact that price formed this bullish order block. Okay, so we have the higher time frame bias. It's relevant for the context of the trade, but not for this teaching, okay? But now you know there is higher time frame bias. So essentially, you are playing the move from here, right? You are looking for price to run to the upside from here to target that internal range liquidity, okay? So let's play out a little bit of the intraday price action, right? So you can see here that price swept out this old low. So we have the liquidity for the move, and the level of SMT was this low down here that formed at about 1:45 in the morning. You can see that the dollar index failed to get beneath that low. But then if we go onto GBP USD, you'll see that that same high, right, at about 1:45, price was very able to get above that. So we have a level of SMT. But how do we go about confirming that this high here, this level of SMT, has a high probability of holding? Well, we make sure that it aligns with the daily cycles. The same thing if you was playing DXY, right? If you play futures, you want to know that this level has a high probability of holding, and you do that with the daily cycles. So if we go back on GBP USD and we actually put the kill zones on, you can see here that we have Asia's high. Price manipulates Asia high and forms the high up here within London kill zone. And when you see the daily cycles flowchart, you will see that that is actually within that key time window that I spoke about, right? So if we know that this has a high probability of holding because of the daily cycles, and that it is likely to be the high of London session, then that goes with the SMT as well. You know that this SMT level has a high probability of holding. The same if we go back onto the dollar index, okay? You'll see that price doesn't actually take out Asia's low, but that doesn't matter because it's SMT, you still have the manipulation. And this low down here was formed in London kill zone within that key time window, so we know it has a high probability of holding, which means that this level of SMT also has a high probability of holding, okay? And if I go ahead and play it out, you'll see that the SMT holds very nicely and we reach the target. Same on GBP USD, right? That high held and price ran down towards the target. There's one more example I wanted to look at, and then we're going to go back to that first example and I'll show you how this would have helped you avoid that situation. So here on Euro USD, you can see that price actually retraced into this 4-hour bullish FVG, and we got a nice big reaction away, and price was able to get beneath these old lows down here, okay? And then if we go onto GBP USD, this FVG here is the same FVG as EU, right? It's beneath the same 10 AM candle, except price was nowhere near to taking that out. So we have a level of SMT. But how do we actually go about making sure that this level of SMT has a higher probability of holding? And again, it's all to do with the daily cycles, right? The daily cycles will do this for you very easily. So if I was to put on the kill zones, you can see that London opened up here, ran lower, taken out Asia's liquidity and this relative equal low that was with it, right? So we ran out the liquidity and we formed the low here within that key timing. That is a high probability time for London to form the low of the session, right? So if that's a high probability that London's going to form the low of the session there, then we know that this SMT also has a high probability of holding. Same if we go on to EU, right? You can see that London opened up and ran beneath Asia's low and that old low, and we formed the low at that key time within that key window. So we know there's a high probability that's going to be the low of the session and price is going to run. So we know that this level of SMT also has a high probability of holding and that price is going to run from that level. And if I play this out, you can see London kill zone runs very nicely. Same thing on GBP USD, right? They both run very nicely. So how would this information have saved you in this example and countless other examples? Well, let's have a look at this. So if I was to put on the kill zones, okay, you'll see that this, first of all, isn't a London protraction cycle. It is actually a valid daily cycle that I teach, but it's not a London protraction cycle. But the main point is the timing of the low, okay? You can see that London moved lower and we actually formed this low at 9:15. When I show you the key time windows, you'll see this is outside of that key time window. So when price formed this low down here, right, you would understand that it is not a high probability low, right? It doesn't have a high probability of being the low of the session and for price to expand to your target away from it, which then in turn would tell you that this level of SMT also doesn't have a high probability of holding and will most likely fail. Okay, and if I actually go ahead and put on New York kill zone, you'll see that what actually held was a valid daily cycle, right? This here is a New York reversal cycle, right? So price took out London's low, and as you'll see with these key time windows I'm about to show you, price formed the low within that key time window of New York, and that low held, right? That was the low that held and ran to the target. So you can see how important it is to make sure that when you're expecting a low to hold, or when you're putting on a position, that the low you're relying on is a high probability low, and you get those high probability lows by aligning it with the key timings and key frameworks of the daily cycles. Okay, so let's have a look at these key time windows, because I've been talking about it all video. So I made this daily cycles flowchart, right? It's free for you to download if you want it, and essentially it will take you step by step to identify these daily cycles, right? So London session, you follow these steps to identify the daily cycles, and then it also includes these key windows I'm talking about. So for London protraction, it is 7 to 9 a.m. That is the key window you want to see price form the low at. And as you can see here, 9:15, it's outside the key window, it's low probability, okay? And then you follow the steps. I also include my entry criteria, so you can copy that as well. It also has the daily cycles for New York session, right? So you follow these steps, you'll be able to identify the New York daily cycles. And again, it also includes these key timings. So for this up here is New York reversal. This is a New York reversal cycle steps between 1 and 2 p.m. This 1:30, that is between 1 and 2 p.m. That is a high probability significant low. So that is something that you should be happy to rely on holding. And as you can see, that is the low that held to the target because of the key timings. And again, I also include my entry criteria for the New York cycles. So if you want this, you can steal it completely for free. I'm going to leave a link in the description. It will be the top link. And yeah, that is how you can increase the probability of your SMT levels holding. There are actually 5 other daily cycles that I haven't included in this channel, and I'm not going to be putting on this channel, that you can go ahead and start learning for free using the second link in the description. You'll also get access to a bunch of different courses, and there's also a free Telegram group that you can also get access to. I'll leave that as the third link in the description. And as always, I hope you found value in this video, and I'll catch you on the next one.